Welcome. In this video, can Xcn coin be 3 cents? We will analyze this. Don't forget to subscribe, like, and please watch to the end to understand. When looking at the chart from a broader perspective, a significant resistance zone just above the current price becomes apparent. This area has historically been a point where upward price movements have struggled, where selling pressure increased, and where buyers gave way to sellers. Therefore, from a technical analysis standpoint, this area should not be viewed merely as a horizontal resistance line, but rather as a strong supply zone where the price has previously made turning points. The fact that this zone forms a resistance box, covering a range of prices rather than a single level, indicates that trading volume is distributed here and that many investors have taken positions across different time frames. Such resistance zones are typically not broken easily on the first attempt. This is because they often include both profit-taking from buyers and new sell positions being initiated. Therefore, it's quite natural for the price to pause or pull back slightly upon reaching this level. However, this doesn't mean the upward potential is lost. On the contrary, multiple tests of this area can weaken the resistance and help buyers gain control. Each new test wears down the sellers, weakens the resistance zone, and eventually sets the stage for a strong breakout. If, as the price approaches this level, a strong bullish candle forms accompanied by rising volume, it could be the first sign of a breakout. However, more solid and lasting breakouts typically occur after several attempts. This is a very common scenario in technical analysis and aligns with the principle that resistance is tested before it breaks. Therefore, the price not being able to break this level immediately should not be seen as a negative. Rather, it is a healthy price behavior. Moreover, every time the price approaches this resistance zone, it shows that buying interest in the market remains intact. If the price continues to approach this area while forming higher lows each time, it indicates that buyers are gaining strength and increasing the pressure. Such structures often lead to the formation of ascending triangle patterns, which are classic technical setups suggesting that a breakout is becoming inevitable. A brief pullback after reaching the resistance box can also be interpreted as an area where stop-loss orders are triggered and short-term positions change hands. Investors who remain patient in these zones can make more informed decisions by waiting for a confirmed breakout. Once the resistance zone is broken with strong volume, a powerful and accelerated move, often referred to as a breakout, typically follows. This allows the price to reach higher levels in a short time. It should be remembered that strong resistance levels are also potential areas for strong breakouts. Spending time in this zone, building strength, and accumulating volume lay a more solid foundation for an upward move. In such scenarios, after the breakout, the price often retests the previous resistance zone before continuing its upward trend. This process is considered a sign of a healthy and sustainable trend reversal in technical analysis. If this resistance box is broken, a new gap opens up in front of the price, creating a setup for accelerated upward movement. Technically, once the resistance level is broken, buyer confidence increases, market psychology shifts positively, and more investors join the uptrend. This chain reaction facilitates the price's climb to higher levels. In conclusion, while the resistance box the price currently faces may appear to be a strong barrier at first, it also represents a critical threshold for advancing to the next phase of the upward move. The fact that the price isn't breaking through immediately is not negative. Instead, it reflects healthy and technically positive behavior. After enough attempts, breaking through this level would allow the bullish trend to regain momentum and test higher targets. For this reason, such resistance zones should be closely monitored, and breakout signals should be carefully watched. One of the most notable patterns currently visible on the chart is the formation of a cup and handle pattern. This formation is considered highly reliable in technical analysis and is generally seen as a precursor to strong upward movements in the medium to long term. The current price action clearly reflects the process of forming a classic cup pattern. On the left side of the cup, a previous decline followed by a recovery has created the base. Now, the price is building the right side of the structure, the rising phase. At this stage, investor interest is increasing, and a sense of optimism is developing in the market. Cup patterns typically signal a recovery in investor confidence and a renewed increase in market demand. These symmetrical structures often indicate that the recovery following a decline is progressing in a healthy manner and that market confidence is returning. At the moment, the price is nearing the peak of the cup, previous high levels, suggesting that the formation is in its final stages. At this point, the price may pause and consolidate slightly. The potential handle that could form during this phase would represent the second leg or the completing part of the formation. The handle portion usually appears as a horizontal or slightly downward sloping correction. This process is important as it allows for profit-taking and the elimination of weaker hands from the market. It can also be seen as a resting phase for the price to gather momentum and strength. The upward breakout that follows such a structure is typically strong and backed by volume. This breakout is not just a technical event, but also a psychological confirmation. Market participants now believe the price will surpass the previous highs and enter a new bullish trend. The target level of the formation is typically calculated by projecting the depth of the cup upward. In other words, the difference between the bottom and the top of the cup provides the expected upward potential. This can set the stage for significant price increases, especially in cup formations that develop on larger time frames. Based on the current structure, reaching this target appears technically feasible. Moreover, if the breakout is strong and supported by volume, there could be an upward extension beyond the pattern's target. In addition, the cup and handle formation provides not only a target, but also a strategy for investors. Stop-loss levels can be placed below the handle, while entry points are usually considered once the neckline of the pattern is broken. This is highly functional for technical analysis users aiming to minimize risk and maximize gain. The current structure on the chart fits well with these criteria. The healthy price recovery, the formation of the cup with volume support, and the potential development of a handle all present, encouraging signals for the coming period. Another key point to consider is the time required for the cup formation to develop. Cups formed over longer time frames with consistent waves tend to result in stronger breakouts. The current structure being built on the chart closely matches this description. Therefore, as long as the technical indicators continue to support it, the probability of this pattern resolving to the upside remains high. In summary, the structure the price is currently forming is a clear example of a cup and handle pattern, which holds significant value in technical analysis and can produce reliable results. The fact that the price has nearly completed the cup portion suggests we are entering the final stage of this move. A brief handle formation may occur next, serving as a preparatory phase for a healthy breakout. If this pattern is successfully completed and the neckline is broken to the upside, the price has a strong chance of achieving a move equal to the depth of the cup. For this reason, the current structure presents a positive outlook and opens a valuable window of opportunity for investors that should be closely monitored. We must patiently wait for the formation to complete. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.